Okay, I just got back from a really large e-commerce conference, and I wanted to talk today about a really interesting subject. Basically, we're all focused on marketing, we're all focused on AI, but if your pricing is not correct, from the get-go, from the start, your business model isn't going to work. So we're going to talk about pricing. We're going to talk. I'm going to go through this really quick slide deck here about your marketing is worthless. Your AI is meaningless if you don't get the pricing right. Okay. So the reason is just to give you a little background before I go through this quick deck. That I spoke over at ETAIL, which is a great conference in Palm Desert, and for one of the afternoon tracks, I was the chair, and so I, was able to do sort of the fireside chats and some one-on-ones and also present this deck. And what I've been working on the last couple months is I'm working direct one-on-one with different business clients. So I'm helping these CEOs improve their businesses. And one of the things that you see, right from the get-go is that margins solve all problems. Okay, some businesses are 25%, others are 5%, and honestly, they don't know any better. Not that there's a problem or an inherent problem. It's just their starting point. They thought that was okay for the starting point, but then it leads to sort of other systemic problems within the business. And we're all focused, and most companies are focused on your marketing. They're focused on the AI revolution, and they're focused on all of these other things. They're not really focused enough on pricing and getting it right from the product side. Okay, so I'll try to get this one in my routine fashion, which is pretty quick, in like 10 minutes, not to bore you guys, but also to give you some insights. And then what I'm going to do is I'll share real world information, anonymized, but just some anecdotal stories from companies that I'm working with to give you guys an idea. Because typically, like, for CEOs, you're always wondering, this is what I'm doing, but how are my competitors doing? Or these guys are, undercutting me. Are they actually making money? I think that runs through all of our heads, right? How profitable is the competition? I think we definitely don't spend enough time on that. And we spend way more time than we need to on some of these other facets of the business. Okay, so that's what we're going to talk about. So let's get into it. So why do founders trap themselves into the low margins? Really, of course, fear here. Let me move so you guys can see the deck totally here. So it's going to be, fear of pricing too high, copying weak competitors, no confidence in value. So let's talk about those for a second. So really, is anybody going to buy if I'm selling for 100, are they going to buy if I price it at 149? If I'm selling for 1,000, can I sell it for, $19.99, $2,000 essentially. So but typically there isn't a lot of price discovery and understanding what the price elasticity is. And even if you run those tests, I actually, those are okay. Those are good for like direct to consumer goods that have been out for a while, e-commerce business. But I think on the service side, your offering is going to change over time. So I actually think that can be a trap too. You have to be very careful to just say, okay, I've tested this and I tested that, and here's where I think I land. Instead, I think you have to really focus on your product and product value. So we'll get into that a little bit later. But fear of pricing too high, copying weak competitors, no confidence in value. Okay, so for young entrepreneurs and founders, that is common, right? Because you're starting out, and really you do just need some clients maybe to get going. If you're selling a product, you want some momentum. If you're selling a service, you got to sort of get in the game. So you want to take on a few clients, and that's all fine and good. I'm just saying, if you stick with that, you're going to be in sort of a world of hurt. And that's the thing to be careful with. Okay, so let's continue on here. Okay, weak branding and positioning will kill your pricing power. So like I said, there's a lot of thought on AI, a lot of thought on automation, a lot of thought on marketing, but less thought is what I've seen is on branding. So building your brand, building the feeling that people have about your company and how you influence what that feeling is. So you need to make that emotional connection. You have to have clear differentiation, and you have to have a compelling story. It's amazing. Some of the products and companies that I'm working with, I mean, their products are like incredibly differentiated, totally unique. Others are not. And you could just draw a straight line to margins. You literally, it's a straight line to margins. So what I'm saying is, when you back up and, literally, boom, 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 all the way back to the beginning and conception of your company, you start with your differentiation and thinking about how you're going to find your path to profitability. And there's so many variables, so many different companies can make different types of margins. But I would say to give you a goal to go after is set your net margins, net, EBITDA or better, just net margins at 20%. If you can get the 20%, you're absolutely crushing it in most businesses. Google and Apple, as huge as they are both producing in the low 20s net profit, which is amazing for a public company when you think about it. And they're doing, I don't know, it's about $1 trillion a year, I thought, something like that in sales. You can look up their financial statements. It's all obviously publicly available. So they're in the low 20s. Now, of course, they own their markets and they have a lot of unique advantages, but they're huge. So at a smaller scale, that should be the goal, is to get into the 20 range. Definitely get above the 10%. Now, if you're selling a product, getting above 10 is actually a nice milestone, because remember, you're selling a product, you should be able to scale and get a lot bigger. Selling a service, you're not typically going to get as large as, say, a product business could get. Selling a software is a whole different story, but a service type of business, you're going to need the 20%, because your business probably won't be as big as if you're a product-based business. So, here we talked about differentiation a little bit earlier. You don't have any pricing power without it. So, again, back to product conception. Do you have IP? Do you have innovation, differentiation? Is there a reason to charge more? And have you built out a competitive advantage? So these are all typically things that you think about in the business plan, and if you even do a business plan. But sometimes it's hard to usually we'll have a direction of where you're going, but then you're going to iterate once your company starts. But if you can have this from the beginning, and I just talked to an entrepreneur yesterday that has an incredible product with all this IP and took years to get to the market. The margins are, stunning. They're just, off the charts because of all that work up front, versus, buying something off the shelf in China. You're going to have, you're not going to have that competitive advantage. And if you are, okay, maybe find out how to get vertically integrated. Do you own the supply chain? Do you own the factory? Do you have a way to sort of eliminate competition? Do you have, certifications around the product? So think about it, but I'm, seasoned entrepreneurs are going to know this, but I'm talking about when you're starting out, really focus on this, because maybe you haven't, thought as much about this. You thought maybe more about just coming up with the domain name and what your marketing is going to be. Okay. So basically, if you price too low, and this can be a trap, because entrepreneurs can be, 10 years into their business still making 5%, and it's just, they've come to expect that. And well, maybe their business is 20 million, so they're pulling in $1 million and they feel good about it, but they should be pulling in, 2 to 4 million net profit instead of 1 million, on that same $20 million business. And I'll give a quick example here. This is just a LinkedIn service. Okay. So I get pitched all the time LinkedIn services, and one company charged $2,000 a month for this particular. This is a specific outreach service, by the way. And one charged $2,000 a month, and another charged $4,000 a month, and their pitch decks are basically identically the same. In fact, the one with $2,000 actually had some tech involved, so actually they're better. Okay, because they could do something special with sending more direct messages. They just had this way that they were able to send more direct messages, and they're priced lower than the one with $4,000. So yeah, and I think the one with $4,000 is charging $4,000 a month is doing pretty good. So meaning, the one that's charging $2,000 is sort of, they're giving away their product too cheap. And I mean, there's a million examples like this, but this is one that I just ran across last week. And I don't know what that says. If there wasn't enough price discovery, if they thought they just did a cost plus and said, okay, we're paying, EAs in a different country, this amount, and $2,000 a month per client makes us, $1,500 a month per client, whatever the calculation was. They may have just looked at it that way, but it looks like they're giving up some margin. So, net margins solve all problems. That's what I wanted to sort of finish on here. Net margins solve all problems. It's, I always remember back to basketball, you can't teach height. If someone's 7 foot, it doesn't matter what you do. You're not going to beat them down on the post. They've got the height advantage, right? And the same thing with the business. If you have, it's you will get your competitive advantage by working on your, your product differentiation, all of those things. But when you achieve these high margins, you have a huge competitive advantage. It makes hiring decisions way easier. It makes investing back in your business a lot easier. You're less stressed because you will by default have a better team around you because you can afford a better team. So your life's going to be better. The business is basically doing for you what you probably dreamed that it would be, instead of turning into a very high stress job, which can happen when your margins are not high enough. So, that's sort of what I wanted to finish on, is just really think about your margins. I hope this was valuable. And even if you knew all these things, maybe, it pushed you to kind of take a second look at it. Now, practical ways that you can implement this. Okay. If you're a product business, do more new product development. It's amazing. Some companies are turning over, 20% of their SKUs a year or more, and some are turning over just one new SKU a year. Listen, invest in NPD, get more new product development going, launch more products, and find a way to up your margin. So even, you should do value-based pricing instead of cost plus. So cost plus is just, this is my cost, and I'm going to add a certain margin onto it. But even if you're doing cost plus and you're not to value-based yet, then just add another 5 or 10% to your cost plus model and see how you do on those new product launches. And then on the service, it's the same thing. You could say, okay, this is what we're doing. And you could literally just start bidding higher, bid 5% higher. Are you still winning? Bid 10% higher. Are you still winning? Don't be afraid to ask for more. What I see is so many people are in the hustle. They're grinding, even larger businesses. And it would almost be better to just have less clients, less jobs, less inventory, but at a higher margin, right? Because it's just at the end of the day, you want to be happy and you want to be fulfilled and enjoy your business, and not have the business be of a negative stressor on you. So those are some ideas there. Obviously, it goes deeper, and there could be, you sort of have to get more strategic depending on your circumstances. And for that, if you want to learn more, reach out to me. You just email me directly, Luke at apexceo.co, and look forward to helping you. And I do free strategy calls. If you go to the website, you can just go to the calendar, book a strategy call, and we can talk about the exciting world of margins or whatever's on your mind. I hope this was helpful, everybody. Take care. Have a wonderful day.